Good afternoon, everyone. Welcome back to our next session, which, as I mentioned in closing off the last one, is focused on a global trading solution for investors and opportunity for Nordic life science companies and cross-trading on the US OTC markets. So this really is a session, I guess, for anyone looking to or interested in the opportunities of accessing US capital, which from the conversations that we've had over the last couple of days, I think will apply to many. Delighted to have a panel here of a range of perspectives, which we'll be digging into over the course of the discussion. Please do keep any questions that you have coming in on the chat and questions functions just to the bottom right of your screen. I'll be moderating today's session, and yeah, we would now like to, I guess, invite our panel to briefly introduce themselves and their organizations. So firstly, over to you, Joe.
Yeah, thanks, Josh. Excited to be participating again once year. It's a bummer we have to do it virtually. I know last year we said that this year was going to be in person, but fingers crossed for next year. So, thanks again to Adam and this year Nikolai and Marius for joining us. So, yeah, my name is Joe Coveney, and as quick background, I have spent over a decade working in the capital markets, investment research, and market data businesses at firms like Standard & Poor's, Guidepoint Global, and now OTC Markets. OTC Markets is a US-based stock market where over 11,000 global and domestic securities trade. We operate the OTCQX Best Market, where Orexo is currently traded in the US, the OTCQB Venture Market, and the Pink Open Market. And we connect companies, brokers, and investors alike. And as a vice president on the corporate services team, my primary roles and responsibilities are to work with publicly traded companies from the Nordics to increase their visibility and tradability to US investors.
Fantastic, thanks, Joe. And Nicola, over to you.
Absolutely, thank you. So thank you for inviting Orexo again this year. Nicola Sorensen, I'm the CEO of Orexo, and has been that since 2013, and I was also part of the decision to list Orexo on the OTCQX in the US, and we have been working quite closely with OTCQX to improve the visibility of Orexo during the last few years. And I'm looking forward, Joe, to the next time we could visit your offices, because they're very nicely located down in the south part of Manhattan. So next year, maybe.
Yeah, as soon as you can come to New York, you're more than welcome.
Fantastic. And speaking of New York, Marius.
Yeah, Josh, thank you for inviting us to the conference here. I'm Marius Halvorsen. I am the head of Arctic Securities investment banking team in New York. Arctic Securities was founded in 2007. We are headquartered in Oslo. We have about 350 investment banking professionals covering everything: real estate, maritime, technology, and biotech, of course. We have offices, in addition to Oslo, we have offices in Stockholm, Hamburg, and New York, where I'm currently operating out of. We are an OTCQX sponsor. We were the first Nordic investment bank to be that. The first company we sponsored was a life science food company called Atlantic Sapphire, has today about $515 million on market cap. And thank you for inviting us. In addition to that, we also have a biotech company, as in a biotech investment firm called Aurora, that's on this asset management side of Arctic, but comes under the same umbrella. So very happy to be here. Thank you.
Thanks, Marius. And yes, we've had Ulrika and Torben actually involved as speakers before in the past from the asset management arm. And last but not least, and hearing from you again, thanks for your ongoing participation, Adam.
Hi, thanks. I'm at a live conference, so apologies for any bad connection. Great to be here. This is a very relevant topic. the discussion about the U.S. markets and access to the U.S. markets and U.S. investors is, on an ongoing basis, more and more relevant for our Nordic companies and European companies. So, a great topic to have today.
Fantastic. Thanks, Adam. So I guess to kick us off, this session is all about cross-trading on OTC markets. So Joe, perhaps I could hand over to you to sort of explain to the audience in a little bit more detail about OTC markets, about cross-trading, and what you see as the benefits for life science companies, indeed any companies, but particularly in this sense, Nordic life science companies in the OTC markets cross-trading platform.
Yeah, certainly. So, as mentioned, we're a US-based stock market, and we operate the equity market for all securities not listed on a national US exchange. So over 11,000 securities from around the world trade on our market, which we segment into 3 different tiers based on size and scope of the company. The OTCQX market is our top tier market, where companies like Heineken, Adidas, Roche, BASF, and others all trade. OTCQB, it's our venture tier market, where smaller companies, growth companies, perhaps pre-revenue, they all trade there. And then the OTC Pink market is our bottom tier market. And both OTCQX and OTCQB are SEC recognized and FINRA regulated marketplaces, which offer investors an experience comparable to trading on a national stock exchange. The main benefits for Nordic companies who trade on our markets are that they now have a freely tradable security with a US ticker symbol, a US dollar denominated share price, and it's available by all US investors through their US broker of choice. What makes this so critical and relevant for Nordic companies is you can accomplish all of this without having to do any additional US regulatory or legal work. So OTC Markets gets to utilize a special exemption from the SEC. This exemption is called Rule 12G32B. And it says that companies that are listed on Nasdaq Nordic or Oslo Børs or any other qualified foreign exchange around the world, you can use your home country filings and disclosures for admission to our market. So that means, there's no SEC registration, no Sarbanes-Oxley compliance, no US GAAP accounting standards, and it eliminates some of the more duplicative or burdensome requirements of a traditional US exchange listing. So all in all, cross-trading on OTCQX or OTCQB is a simple, effective, and easy way to, be public in the US without some of the, regulatory headaches that would come along otherwise.
Fantastic. That makes sense. I think a great sort of explanation there for anyone who want a bit of intro to the panel here. And I guess, Nikolai, you're a company who does trade on the OTCQX market, as Joe alluded to before. I think most in this Congress certainly will know Orexo, but maybe you could do an introduction to Orexo, particularly your US strategy as well, and then how trading on OTCQX has been a part of that and your growth in the US.
Absolutely. So Orexo is a specialty pharma company. The focus for Orexo is on mental health, and in particular substance use disorder, where we have our lead product, Zubsolv, that we are commercializing in the US. And the background to our US strategy and the reason why we go into the OTCQX market in the US is we decided in 2013 to start up our own subsidiary in the US. And with that comes a lot of exposure, both to employees, to partners, customers. And we simply thought that it was a credibility thing to show that we were also accessible. For example, we hope that we will see some of our customers liking the products, and then they would have easy access to buy the shares. What we have seen over the time is of course so that the main liquidity in the shares is sitting with our listing in Stockholm. But in particular for some of our employees, even on the management team level, who wanted to buy shares in the company, it's simple for me to start trading in Stockholm, but it's maybe to my surprise, but it is not that simple for people with a normal trading account in the US to start trading in Sweden. Maybe that has improved over the time, but several of my US management team members have bought shares in the company using OTCQX. And actually recently, just during the spring here, I have 3 board members who live in the US they actually also bought shares through the OTC QX market. So for that, I think it's a good way to earn credibility and basically show a commitment to the US customers, employees, partners that we are listed in the US. Then from an investor relations perspective, that of course is creating quite a decent amount of trust. And in particular, we did some efforts a few years back to do some investor relations straight to family offices, let's say, it's kind of a number below typical institutional investors. And being a relatively small company, that is where I think you can find some interesting investors, and in particular when we're working like we are in opioid use disorder, where a lot of US people actually have family members and friends who have been suffering from this. It's a way for them that they can actually be allowed to trade, because a lot of them have mandates, even the family office, not to trade in non-dollar denominated shares. So I think that has helped us, but we've always seen it as a stepping stone. Should we decide later to do a full listing in the US, then we have taken kind of the first step in there. We have gained some trust, and then we can move up. I would also say then that we're working, maybe misusing a little the OTC QX marketing platform. So we do regular video recordings when I could go to the US, actually using their facilities. We've used the facilities to do investor relations meetings. So there's a lot of more soft factors that you can get from OTC QX market and particularly from Joe than what you would normally expect.
Fantastic. And I guess, Adam, keen to bring in you here. Obviously, Nasdaq in the Nordic region are the market of choice for biotech and healthcare and life sciences companies. How do you see the synergies between Nasdaq Nordics and how you work with, or the synergies between Nasdaq Nordics and OTC?
I mean, from my perspective, companies come to our market to meet investors and to raise capital to support their growth over time. And as they develop that relationship with the financial markets, they want to expand that investor reach. And US is a captive audience for specialist investors with a depth that we might not have in the Nordics. So how do you build that investor relationship with the US markets? That's the the million-dollar question in an efficient way. Ultimately, OTCQX doesn't replace an IPO in the US, but stone to build a relationship with the US market. So from that perspective, it's potentially an added tool to, as Nikolai was mentioning, facilitating trading for a certain amount of investors, increasing the reach. But ultimately, once you really want to deep dive into the US markets, potentially, that's when a listing is the next step. And that's what we're seeing. We have a continuous flow from Europe to the US, both for dual listings and primary listings of European biotech companies. The question is, one is the right return on investment, what is the right timing? And maybe by having developed a relationship through OTCQX and to start with, you can in the second instance then build on that with the dual listing.
I think that's a great point, Adam. And you're right. We have close to 20, 25 companies every year that graduate from OTCQX up to the New York Stock Exchange or Nasdaq. And it really does serve for the right kind of company as a fantastic tool to, start to solidify their US investor base, get the story out to a broader audience, boost the valuation to really set themselves up for a successful IPO if that's in the plans. Or alternatively, a lot of the challenges that Nikolai described in terms of just general access, helping support companies with existing liquidity and, reaching more US investors, whether it be employees or, family offices or other types of, US investors that aren't set up to trade in foreign markets. So, the benefits is certainly twofold. And, I agree that, it is a good way to be in the US market.
And Marius, keen for your thoughts as well. Maybe you could sort of delve a little bit more into Arctic Securities and your role in all of this. And I guess some of the expertise in cross-border transactions, as well as how you work as a sponsor with OTC in this process.
Yeah, I actually started my career as a cross-border arbitrage trader in Goldman Sachs 22 years ago when trading was still done manually. So, of course, the Nordic companies have always been very active in seeking dual listings or listings in the US, whether it's back to in Sweden, LM Ericsson or Nokia in Finland, or whether it's Norwegian Hydro or Statoil or whatever in Norway. First of all, as an investment bank, of course, it's very important for us to emphasize that we champion regulations like Sarbanes-Oxley, like SEC rules, regulations, etc. Of course, like everyone here, just emphasize that. So for us, when we market OTC QX, it's not for companies to circumvent that. It's just that they have the equivalent regulations already in place in Europe. And then, of course, the important capital raising for the kind of companies that we take to the market it will always be important to access the US market. That's also part of why we have an office here in the US, to have a direct touch on the market. Of course, there will always be sort of a dollar bias and a home bias for a lot of investors, even though today, very easy, they can trade electronically in pretty much any country they want through whatever platform they use, Fidelity, TD Ameritrade, or their broker dealer. But it's a natural home bias and a natural dollar bias also that we see attract a lot of investors. So for us, we only see positives with dual listings. It's cost efficient, it's time efficient, it's sufficiently regulated, and it increases liquidity, which over time has proven that the increased liquidity, closing the spreads on the stock, also increases the pricing. So we only see positives.
So, and you raise a good point there. I'd be keen to sort of open up just to the wider panel and discussion, and how accessing US capital is always a key consideration, particularly for I guess European life science companies. And in the Nordics, there's a lot of public companies who do go public relatively early, and that is a key consideration. So maybe to Joe first, but then keen for everyone's thoughts on I guess a little more on the sort of benefits and the opportunity of the secondary markets to I guess increase that investor exposure and sort of access US investors. Maybe Joe, you could kick us off.
Yeah, I mean, the whole goal of this exercise and why companies join OTCQX or OTCQB is to grow and diversify the shareholder base, improve trade volume, enhance liquidity, and ultimately help companies achieve fair valuation. And you can do this at a fraction of the cost, time, or effort, compared to a traditional dual listing in the US. I tip my cap to Adam and the team at Nasdaq Nordic. It's been impressive to really watch the explosive growth in IPOs, especially in the SME space. The cutting edge businesses that are coming to market, like green technology, renewables, biotech, obviously, gaming, etc. It's been really fantastic to see. But I don't think necessarily the success is reaching the masses in the US market. The big thing is, how can you increase your visibility and making sure that you're reaching your desired audience? And it all goes back to the fact that the US ticker symbol is such a key cog in the wheel, and without that ticker symbol, it's very hard for order management systems, market data vendors, to program and to pick up those press releases and other material news that companies are putting forth. So, I think, the fact that once you're on OTCQX or OTCQB, you now have this US ticker symbol, solves a lot of the US dollar biases that Marius was describing, and really just opens the door, to greater access to US investors of all types.
I think, so if I can add a little to I think one interesting observation when I look at the life science companies in Sweden is quite a few companies have as a part of their strategy is now just to open up operations in the US, start commercializing in the largest life science market in the world. And that's where I think the the logic suddenly, if you become more and more US centric in your operations, I also think there's a lot of benefits of increasing your financial activities in the US. And that, of course, also make it easier for US investors to understand your business. If you're commercialized in the US, you're available in the US, they might even see your products when in the doctor's offices and others. It's easier to relate to, and that's where OTCQX and a full listing in the US, of course, would take away a lot of hurdles in that trading. So this move to the US from an operation perspective, I think can go very nicely hand in hand with investor relations and that listing in the US.
Does that ring true with you as well, Marius, in terms of the companies that you sort of looked at bring over and accessing capital in the US and your seat in New York?
Absolutely. Absolutely. I fully agree with Nikolai on that.
I think we've maybe temporarily lost Adam for his thoughts, but I suppose maybe a comment here on just the US markets in general. Obviously, it's been quite a very busy, sort of quite volatile time, I suppose, over the last 18 months or so. But also lots of capital, I guess, flowing particularly into healthcare and life science companies in general. Perhaps the panel can comment a little bit on how they see the market, particularly in the life sciences and healthcare industry, sort of progressing with a bit of a US perspective, and sort of what you're seeing at your respective organizations in the sort of US investment landscape. I mean, Joe, are you seeing more trading of any life science companies on the OTC platform?
Yeah, I think maybe just to speak as a market on the whole, 2021 has been a banner year here at OTC Markets. We've had milestones in terms of number of new companies that have joined our markets. We've hit 500 companies on OTCQX, which was fantastic to celebrate. In fact, our first Danish company joined and became the 500, which was wonderful to see. We've got over 1,000 on OTCQB, and we've broken significant records in terms of trade volume. OTCQX, the average daily trade volume on OTCQX, 1.1 billion US a day, over 170,000 average daily number of OTCQX trades, 100 million plus in terms of daily share volume. So, really just record breaking across the board. I think that's a combination of the volatility that we've seen in the market, but also just the fact that companies recognize that they need to have a presence in the U.S. and in order to maximize your global investor relations or corporate finance strategy, trading on a U.S. market is a strategic asset to support those goals.
And Marius, I guess from your side as an investment bank, I comment for you just in the healthcare investment market in the US and what you've been seeing more generally.
Yeah, no, we have seen a wave of companies coming to the market, particularly in Nordics, but particularly in Norway over the last year. It's whether it's life sciences, biotech, or green economy related companies, or a mix of that. There's been a huge wave of them. Clearly, many of these over time will seek dual listings. As Joe said, one is for capital access, but also two for the investor relations. It opens the market much broader. And of course, one thing is to market yourself from abroad, another is to have local access. I think we will see a number of companies. As I said earlier, the Nordic market has always sought the US and have a strong history in that, and that will definitely continue.
And Adam, I think we have you back now.
Yeah, sorry about that.
No problem. So yeah, I guess also another person to maybe comment on the sort of US healthcare and market. Joe was talking about the sort of growth that they've seen across the board on OTC, but I guess similar story at Nasdaq really, and particularly in the sort of healthcare and life sciences arena. That sort of, I guess, any words on the US healthcare market at the moment?
Well, I mean, it's definitely one of the most active years we've had, both on the primary and secondary side. Dual listings continues to be relevant from Europe to US. not as much from Nordic to the US, partially because the Nordic markets has been so active and so deep in itself. But we're seeing, you know, we had Securities do its dual listing. We've had a continuous flow from Danish companies in the US. So from my perspective, a bit on the line that what Marius was saying, ultimately a dual listing really adds the additional value of, you know, expanding your investor reach, your awareness, your brand, the relationship, and on a commercial level, you know, it's just a different quality stamp. But again, you have to balance that with the return of investment and the cost that comes with it. So it's a step-by-step process, but clearly the US market is very appreciative of European entrepreneurs and the science that comes with it. And there's a good track record of many European companies that have access to US markets through a dual listing, and we continue to see that flow.
I guess, yeah, more generally in terms of then accessing US investors and accessing US capital, as we talked about, is a key consideration for all companies, really. Maybe come to you, Nikolai, first on this, but I guess what's your story been, obviously, with OTC and trading on their market, but I guess in terms of reaching out and connecting with US investors, particularly during this time when, you know, you can't travel as everyone's used to, and connecting at events, you know, how's your experience been with, I guess, any advice that you might have in terms of connecting with US investors for a business like yours?
It's to be completely honest, it's not. If you go in and look at our top 10 shareholders, you at the moment you don't find anyone in the US. There were more some years ago, and from an Orexo perspective, the last year we have been we actually decided to slow down a little in the US because of the pandemic, but I also think it's a timing in the company, and that's actually back to Adam's comment about return on investment. I also think that it's just listing in the US, it's not going to give you a lot of liquidity and volume. So you need to do a promotion. So there's a sales effort behind that. There's a need for investor relations, outreach. I think there are times in the company's evolution where you can find trigger points which are the right ones to go to the US market. So while there's a lot of investors, there are a lot of money, they also have a lot to choose from. So how do you stick out in that? And that's something I think from an Orexo perspective, when we have done our rates, you can say in the US, has been when we see that there are some really good story points in the company. And here, the pandemic, from an operational perspective, has delayed some of these kind of inflection points in our value stories with US investors that would work. But there's no doubt it's in the plans. It's something that we're going to go up with later, but I would say that it is a lot of work, and of course, if you should do a full listing in the US, that come with a lot of administrative burdens also. So it's a decision you should take care of. It's very easy to say, okay, you just go for the US, but it does come at a price. And the Swedish market is right now quite attractive, I think. And if you look at the valuation for specialty pharma during the last year, has not been as advantageous. Actually, on the contrary, I think some of the Swedish valuations at the moment are living at a premium compared to what you would see in the US. So that, of course, lower the appetite. Whereas there are other areas, and among that, some of the stuff that I'm working on, where we're moving away from pharma and into digital therapeutics and digital health, where the US clearly has a significant valuation gap, or they are valuing these initiatives and companies at a much higher rate than what we see in Europe. So from right now, from that perspective, the US would be the right place for us to go, because we have a factor of 10 at least in the way it's valued in the US compared to Europe. But for specialty pharma, for the last year or two, the value gap has not been that advantageous in the US as it has been historically.
And Joe and Nikolai mentioned before, just at the beginning there, on some of the sort of investor relations and the normal things that he does with you as in your offices in New York to sort of raise that profile. Maybe you could talk a little bit sort of how you also try and help promote companies who do this to US investors.
Yeah, definitely. I'll quickly respond, and then I think it would be more impactful if we heard it from Nikolai again. But part of the annual fee to OTCQX gets you access to our complimentary visibility tools. And, tradability and visibility go hand in hand. I certainly feel that one doesn't work without the other. So, once you join our market and solve a lot of the tradability and connection issues, now the focus really turns to how can I tell my story to generate demand and reach the broadest audience. So, all of our market data is fed to the major financial media outlets, the Bloombergs, the Refinitives, the FactSets, those type of providers. Major research houses all consume OTCQX and OTCQB data. Additionally, every company can record a CEO video interview with us, which we then, publish across our various marketing channels. We host virtual investor conferences, which Orexo has presented at a few times. Love to have companies come down to the office like Nikolai described, and use the market center for investor days or New York City based roadshows, things like that. Look forward to when Arctic can come by with some of their clients and do the same. So, lots of different kind of tools that companies can take advantage of to, again, maximize the US audience that they're trying to find.
Maybe Nikolai, you could to comment to some of those, as Joe said, on some of those experiences you've had in that exposure.
No, it's as I said before, I have enjoyed the hospitality of Joe and his team in the offices, and one of the stuff that we've done have been video interviews, which I must say are very professionally produced. So it's been a good marketing tool, and we're using the conferences that Joe is setting up on a regular basis also as a marketing tool, and the same goes for our press releases, are all released to the OTCQX, which goes back to one of Joe's first comments about how do you distribute and how do you ensure that you have visibility for US investors. Now we have a platform where they can quite easily ensure that every press release that we have in Sweden are also accessible through the OTCQX platform for US investors. So that I think that's been very helpful, and in particular when we a few years back did an extra effort to move up the attention in the US. We do that, and now when I hope we soon can go travel again, the plan for Orexo is definitely to be back in the US and do much more investor relations during the next year. And our stepping stone for that will be OTCQX market, and I think one of the first things we do with Joe and his team is to organize another CEO interview and talk to them about how they can help us increase our exposure. And then actually on the soft side is you need advisors for when you go into the US. Of course, you need to work with investor relations firms often to help you setting up of meetings, and they're also something that we're little on the side have asked Joe a couple of times and the OTCQX what their experience have been with different investor relations firms in the US. So get some feedback on that, and be sure that you at least choose someone that they found is worth.
We've actually had a question come in, which I think could maybe sort of loop this all together as well. The question is, how early should a company approach each exchange, and what sort of stage of company tends to do best on the OTC markets? But maybe it's a sort of question could also go to Adam about if there are any sort of following on, I guess, any general valuations or certain things you would need to have in place if you were considering a sort of direct US listing or dual listing in this case. But maybe to Joe first, how early should companies be potentially engaging about the markets, and what companies tend to do best on OTC markets in general?
Yeah, I think the connection that Nikolai described earlier is really kind of the roadmap for success. And that connection to the US market, whether it's employees, customers, operations, growth targets, you name it, whatever that connection is, that really solidifies the strategy for joining our market. So, if you need to expand on that and increase US investor demand, trading here is definitely a strategic asset, like I described, and having that connection is really a good first place to start.
And maybe Adam, you could sort of comment as well on, for companies who were considering a dual listing, are there any sort of key metrics or things they should be considering, or at what stage they should be looking at that potential dual listing jump from your perspective?
Yeah, so I mean, of course, we've seen to Nikolai's point, we've seen the Nordic markets take off and become a good starting point for many companies to establish themselves in the public market. I think, maintaining the dialogue in parallel with the US market, that comes naturally, step by step. So it's not something that you just do overnight and you decide to IPO. You build a dialogue with the investors over time. And you have to balance that. Again, a return of investment. When is this, when is your story ready for the US markets? How can you build a relationship with the US investors step by step? And then when the time is right, probably where you're able to raise 50 to 60, 50 to $100 million, that's really with the opportunity you have to from a story point of view, to evaluate should you extend your current Nordic listing or European listing with the US listing. And the value you get there is that you then are able to bring on US investors that typically are not allowed or potentially do not feel comfortable investing in other markets, do not want that added risk. So I think it's ultimately the investors saying, listen, we like your story, but the criteria is that you need to list with us. You need to list in US markets. And so I think, when you're able to raise that kind of money, then that's basically when you are in a stage where you can evaluate this. And again, it's not a must, but that's probably the maturity level the US market is looking for.
Yeah, the choice point is different for every type of issuer. I mean, you could be, a small cap company listed on Nasdaq First North. Let's say you suffer from a lack of liquidity. You could easily join OTCQB, our venture market, or even OTCQX if you qualify. And, this is a proven way to increase trade volume on the local exchange, with our market kind of serving as a user interface or a gateway back to Nasdaq First North. And then additionally, you can just, it's a very easy lift to raise your profile and continue the dialogue with investors like Adam described in the US market.
And Marius, from the banking side here, any sort of thoughts on any of this?
Yeah, we in this wave of new companies we have seen coming to the market, many of them very, very early stage. We like, I agree with Adam. We tell them to, make sure you have grown your company to a level where your story is ready for the US market. If you need to raise $50 to $100 million, then the US market is a good market to be in, but you need to be ready for that. And also, like Nikolai said, it's a lot of work if you want to utilize these platforms. One thing, yeah, you can get the listing, but what do you really want it for? If you wanted to over time raise money so that you can continuously grow your business and see it as a tool for growth, then you constantly have to be in the market yourself and take the time and take the effort and make your organization available. It doesn't do itself. So one thing is to be ready, meaning just make sure your story is properly baked and ready, and then you need to be also prepared to do the work.
Certainly makes sense.
I think if you can just comment, I think there's another soft factor that at least I haven't experienced with. So when is the right time? But I felt that when I bring some of my US management team members, that with that local connection is getting a little more trust. Even though I hopefully I can make myself understandable in English, but I'm not American, and I think this. When you are in a development stage company, there's a lot of the investment is made on trust and management, and I think here the feeling of a local connection is often, and it's got a little like the icing on the cake, I would say, and that of course again I would say I think it's strange if you were a Swedish-based R&D company with no operations whatsoever in the US. You're quite early in your travel, and then suddenly get the idea you should move to the US. I think that's something you can do when you go in. You need a certain size, as Marius said. At least I've learned that if you want to do a full listing, you probably are at around closer to $100 million than 50 before it actually pays off in all of the efforts work to do that when you're a small and Swedish R&D company. I think is simply premature, and I would even question if IR invest activities against the US market is the right, unless you have something that is really unique that you can build your storyline around. And of course, that's every issuer, as Joe said, do have a unique storyline, and that's something you should look at. But it is not a holy grail. That's at least my experience. It is a lot of hard work to get to US investors.
Absolutely.
Again, there's so much competition about the attention. There are many other companies who are both US companies and every other region of the world who are moving to that, the world's largest finance market.
Certainly.
No, I think I just to add to that, I agree with Nikolai. It's not about going to the US market to get valuation. It's about what's the relevance of your equity story and growth story. And then you can amplify it by raising capital and bringing on US investors. And so from that perspective, I couldn't agree more. And we're seeing that with the SPAC phenomenon now, that, you know, your US SPACs, some US SPACs are bringing European companies, and not all European companies are well received by US investors in the SPAC structure, because they feel, where's the relevance for the US market? Even though there's great technology and so on, there might not be relevance. So relevance and, you know, the understanding of the US market from a commercialization point of view is key.
Fantastic. So yeah, we're coming to the end of our time here. I guess we have a few minutes left. So I guess maybe in summation of the discussion here, and I'll maybe come to you, Joe, last on this one, as this session's all a bit about your markets really. But I guess in this sort of, as we're coming out of the hopefully the end of the last 18 months and the pandemic situation, and getting back to some sort of business as normal, and maybe some more interaction and sort of more meetings physically and access in the US. But I guess any sort of advice any of you or all of you might have for publicly listed companies and the next stage in their development and journey, both in terms of financing, but more in general, you know, if you have any sort of specific advice that you might want to impart as a sort of final thoughts, maybe come to you, Adam first.
Yeah, well, you know, Nikolai has been very gracious to share his insight in terms of his everyday in managing, you know, their fantastic company. But from our perspective, I think one positive with Corona is that the world has gone digital. So the question is, how do you engage in an efficient way with US investors or international investors over time, and leverage that platform that has been created that wasn't really there or as established or accepted as it was before. But at the end of the day, you know, build a relationship with investors, and when the time is right, that's when you should open up for trading or you know, looking for dual listing in the US. But you can't just show up in the US market and expect to be well received if you haven't done the groundwork. And the groundwork continues after you've done the listing as well. So it's an ongoing journey, but hopefully a dual listing potentially down the line can help strengthen the further growth of the story.
Fantastic, thanks, Adam. And Marius?
No, I think you know, in terms of technology, it's proven so efficient to market companies, and capital is just flowing more efficient than anyone could ever expect during this period. So, in terms of, we talk about, you know, having to do the work and it's challenging, but keep in mind a bank like Arctic, you know, we, in addition to our global banking reach and our global sales force, we also have a global corporate access division that will help you put together all the marketing and have all the marketing tools that you need in order to reach on a continuous basis investors in the US market, worldwide, of course, but particularly here now, since we're talking about the US market. So the technology has made it, you know, so much more effective. So if you have any of this conference, you know, just reach out to us if anyone is looking to take the step or wondering how we actually do it in terms of marketing, because we have a whole division that help companies with that.
Wonderful. And Nikolai, your final thoughts?
I think if there's one area where there's some time to be safe for a CEO, that's during roadshows. So and then you can cover different time zones just sitting behind your desk. And then I'm still a believer that sometimes it's good to meet people in a face-to-face meeting, but there's no doubt that I think the acceptance among investors is so much higher. And even though I didn't do it in the US, we did a capital raise in Sweden in February, and it was the fastest we have ever done, and it was the most convenient because I simply just sat here in exactly the same chair I'm at right now, and in 2 days I had met more investors than I did before, and more than I actually calculated, more than a week of traveling. So and that's something I've heard from colleagues who have been raising cash outs in the US market. It's the same, and I think that's a major step forward. But I would, again, my one advice, and I have done some very unscientific research looking at some other Swedish companies who I know have been doing a lot of efforts in the US, and it's not that many who have succeeded unless that they have gone all in. So companies like Securities, who just did a listing, they of course will have a natural liquidity in the US. Same with Danish Sealand Pharma, but it is not. You can maybe make a one trip and you get a little peak in your shareholder base, but if you're not back the next quarter, then you will quite easily fade back down. So this is just like everything else. You just need to have a long time and endurance and stamina to keep it going.
Fantastic. And I guess Joe for the final word.
Yeah, no, first off, thank you to Nikolai and Adam and Marius for joining us today. You know, it was fantastic to hear your experiences and your insights, and hopefully the audience got something out of this as well. And Josh, you and the team at LSX have been great. So thank you again to everyone. Yeah, in short, I mean, if you're listed on Nasdaq Nordic to maximize your listing, cross trading on OTCQX or OTCQB is a simple, easy, and effective way to get more trade volume, reach more U.S. investors, improve your visibility, and from there the sky's the limit. You can continue trading on our market to service existing U.S. liquidity needs, or use it as a springboard to a full-blown dual listing if the strategy puts itself that way. So easy, light touch. You can use your Nordic disclosures for admission, and we're excited about the the growth we see from the Nordic market, and whatever we can do to help, please do reach out.
Fantastic. Thank you, Joe. A brilliant summary there. And yeah, you can still reach out to Joe. Indeed, all of our panel today through our platform. It's open, as I said in the last session, throughout the rest of this week and indeed next week. So please do send out more meeting requests, try and book in more meetings. That's what we at LSX have always been focused on doing, is connecting people and trying to drive the right connections to help people grow their businesses in this space. So thank you again to Adam, to Marius, to Nikolai, and to Joe for this session. We'll be back on the main agenda for our closing and final panel of the Congress. It seems to have rushed by very quickly in just 13 minutes. Again, looking a little bit at US market access, investment and planning, but specifically about building a successful international medtech businesses. So see you all very shortly at 4 o'clock.